Welcome to our channel, where we explore the latest developments in finance, economics, and technology. In today's video, we'll be discussing a hypothetical scenario that many of us fear. What would happen if a major bank were to go bankrupt tomorrow? In the wake of the 2008 financial crisis, this question has become more urgent than ever before. With trillions of dollars at stake, the collapse of a large financial institution could have serious consequences for the global economy. So, in this video, we'll be examining what could happen if such an event were to occur, and what steps individuals and governments can take to prepare for the worst. Let's dive in. Welcome to In Case, the channel that's all about being prepared for any scenario. We believe that it's important to plan ahead, just in case. That's why we bring you the latest information, tips and advice on a variety of topics that will help you navigate the unknown, from technology and finance to health and safety. We've got you covered with insights and strategies that will prepare you for all possibilities. Whether it's a natural disaster, a sudden job loss, or a global pandemic, our channel is dedicated to providing you with the knowledge and resources you need to stay ahead of the curve and be ready for whatever life may throw your way. So if you're someone who likes to be prepared, then this channel is for you. Don't forget to hit the subscribe button and the notification bell so you never miss an episode of In Case. Thank you for watching, and let's get started. The immediate effects of a bank going bankrupt can be quite catastrophic for individuals and the economy as a whole. One of the most significant effects is the loss of people's deposits and savings, which can result in financial ruin for many. The bank's customers may not be able to withdraw their money, leading to a lack of liquidity in the system. This, in turn, can lead to a reduction in spending and investment, which can further impact the economy negatively. The stock market may also take a hit, with shares in the bank and other financial institutions experiencing a significant drop in value. Moreover, the employees of the bank may lose their jobs, leading to a surge in unemployment. These immediate effects can have a ripple effect, leading to a broader economic crisis if not handled effectively. Here are some potential long-term effects of a bank going bankrupt. 1. Economic instability. A bank going bankrupt can have long-term effects on the economy, particularly if it is a large, systemic bank. This can lead to a decrease in investor confidence, a decrease in lending, and a decrease in overall economic activity. 2. Loss of jobs. The closure of a bank can lead to a loss of jobs not just within the bank itself, but also in the industries that it supports, such as construction and real estate. This can have a ripple effect throughout the local and national economy. 3. Government intervention. If a large bank goes bankrupt, the government may need to step in to prevent further economic fallout. This could involve a bailout or other forms of government intervention, which can have significant political and economic consequences. 4. Consolidation in the banking industry. A bank going bankrupt can lead to consolidation in the banking industry, as other banks may acquire its assets and liabilities. This can lead to a decrease in competition and a concentration of power within the banking industry. 5. Changes in regulations. If a bank's bankruptcy is due to fraud or other illegal activities, it may lead to changes in regulations or increased government oversight of the banking industry. Overall, the long-term effects of a bank going bankrupt can be significant and far-reaching, affecting not just the bank itself, but also the wider economy and society as a whole. In the event of a bank going bankrupt, the government may step in to provide a bailout to the failing institution. This would involve the government injecting funds into the bank in order to keep it afloat and prevent it from collapsing entirely. This would be done to prevent a domino effect that could potentially destabilize the entire financial system, as the failure of one bank could lead to a loss of confidence in the entire banking sector. However, this intervention would come at a cost to taxpayers, who would be forced to foot the bill for the bailout. The government may also implement new regulations and oversight measures to prevent future bank failures and protect consumers. These could include stricter lending standards, increased capital requirements, and more rigorous stress tests to ensure that banks are adequately prepared for potential economic downturns. Ultimately, the goal of any government intervention in the event of a bank going bankrupt would be to ensure stability and prevent a larger financial crisis from occurring. Here are some personal actions individuals can take in case a bank goes bankrupt. 1. Stay informed. Keep an eye on the news and stay up to date with the latest information about the situation. Check the bank's website, social media pages, and news outlets for official statements. 2. Assess your account balances. Check your account balances to determine the amount of money you have in the bank. If your account is FDIC insured, Your deposits are insured up to $250,000, so you can rest assured that your money is safe. However, if your account exceeds that limit, you may want to consider moving some of your money to another bank. 3. Be prepared to access funds. In the event that the bank goes bankrupt, it may take some time before you can access your funds. Therefore, it's a good idea to have some cash on hand to cover any immediate expenses. 4. Contact your creditors. If you have any outstanding loans or debts with the bank, contact your creditors to discuss your options. They may be willing to work with you to come up with a payment plan. 5. Consider other banking options. If the bank does go bankrupt, you may need to find a new bank to do business with. 6. Research other banks in your area and consider switching to one that has a strong reputation and good reviews. Remember, while the idea of a bank going bankrupt can be unsettling, it's important to remain calm and take the necessary steps to protect your finances. By staying informed and being proactive, you can minimize the impact of the situation on your financial well-being. In conclusion, a bank going bankrupt can have significant immediate and long-term effects on individuals, businesses, and the overall economy. While the immediate effects can cause panic and disruption, the long-term effects can be more severe, leading to financial instability and a loss of confidence in the banking system. However, government intervention and personal actions can help mitigate the impact of a bank's bankruptcy. It is essential for individuals to take steps to protect their finances and seek assistance if needed. Ultimately, it is crucial to remember that while a bank's bankruptcy may be a challenging and stressful situation, there are resources available to help navigate through it. Thanks for watching this video on In Case. We hope you found it informative and useful for your preparation needs. Remember, being prepared for any scenario is always a good idea, and we're here to help you do just that. If you enjoyed this video, please give it a thumbs up and leave a comment below with your thoughts or questions. And don't forget to subscribe to our channel and hit the notification bell, so you never miss an episode of In Case. Also, be sure to check out our other videos on a variety of topics that will help you navigate the unknown. From natural disasters to financial planning to health and safety, we've got you covered with insights and strategies that will prepare you for all possibilities. Thanks again for watching, and we'll see you in the next episode of In Case.